Kitco News, special coverage of the New Orleans Investment Conference, is brought to you by Uranium Energy Corps and U.S. Gold Mining.
Hey everyone, welcome back to Kitco News on location here at the New Orleans Investment Conference. It's a beautiful day and we got a lot to get to. The U.S. national debt has just crossed a staggering milestone at $36 trillion. That according to the U.S. debt clock, which is of course a real-time tracker of the nation's finances. But what's even more alarming is that the pace of which this debt is climbing. In just 4 months, it's grown to nearly $1 trillion, a 6% increase since January. And to put that in perspective, the Treasury reported surpassing $35 trillion just this past July. And the European Central Bank is issuing a stark warning about the Eurozone's future. In its latest stability review, the ECB warns of a growing debt crisis in that region. Here to break it all down and help us figure out what it means for the assets is Larry Lepard. Of course, he's the founder of Equity Management Associates. Thanks, Larry. Thanks for joining us.
Nice to be with you, Jeremy. Enjoyed it. Look forward to it.
Me too. Let's talk debt. It's a staggering statistic here, and I got to look down. I wish I had my reading glasses, but of course, the U.S. has hit $36 trillion. The Congressional Budget Office predicts it'll exceed 106% of GDP by 2027, climb to 122% by 2034. The International Monetary Fund paints an even darker picture. They've warned that this could top 140% of the GDP by 2032. What does this look like?
Well, it's a mess. In fact, it's higher than those numbers right now. Right now, debt to GDP in the United States is about 124%. And we've got a fiscal train wreck going on, and the government, what happened is the government spent a lot of money during the COVID event, and they never cut back. In fact, they stepped on the gas. And so we just finished a year where they spent $6.75 trillion, which is almost as much as they spent in the peak year of COVID. And we've got an economy that's full employment, close to full employment. We've got, a stock market that's at record highs. And of course, they did a lot of it. They did this to try to win the election, and they weren't successful. But I think that's part of the reason why they were so profligate. And, really until Trump won and now they've created this Doge committee, there's been zero discussion about the debt problem. But it's a big problem. I mean, it's going to cause serious economic issues in the next year or two.
Yeah, give the audience a little bit of a breakdown over the next year. I mean, we're going into a new presidency. We already know what that looks like from the past time, but some, new regulations. Maybe there's tariffs. What's this year going to look like?
Well, it's hard to say. I mean, so as you know, this Doge committee, Ramaswamy and Elon have decided they're going to try and cut $2 trillion in annual costs. And, my response to that is good luck. I mean, I'm all in favor of what they're trying to do, and I do believe they will cut some costs, no doubt. There is some government fat, but as I said in the speech I gave here a few days ago, 80% of the money that's spent by the federal government is in the big four categories, which are Social Security, Medicare, defense, and interest. And those are very hard to touch. Go after entitlements, that's like the third rail. Right. Defense, maybe they'll take some money out of that if they get peace in the Ukraine. But the interest costs continue to ramp every year, and defense is pretty untouchable as well, although maybe they'll be able to cut something there. The remaining 20% is the rest of the government, and even if they take a hatchet to that and cut 30% of that, it's a couple $100 billion a year in savings. In a year where, last year they ran $1.8 trillion in deficits, and this last 6 months annualized, the deficit run rate right now is $2.4 trillion. So, let's just say, give them their due. Maybe they cut $400 or $500 billion, and that would be hard to do, but maybe possible. It would still only take you from 2.4 back to where we are now, 1.8, 1.9. And the point is, the slope of all the curves is accelerating very steeply. Interest cost, federal spending, deficit, et cetera. And this is going to lead, in my view, as I've said many times, is going to lead to a sovereign debt crisis and a currency crisis. Right. And you can already see that. The evidence that that's taking place is that Bitcoin's at record highs and gold's near record highs. And gold was at a record high just recently, just backed off a little bit. But, gold started the year under 2070, and now we're playing around with 2,600, 2,700. Bitcoin started the year, at 58, it was even lower than that, I believe, but it was at 58 for a big part of the year. And of course, now we're pushing up against 100. So these two sound money assets, sound money alternatives, things that could be a neutral reserve currency, they know it. They can see the problem. And they're responding.
So what do you think? Do you think the average population, we've been watching these inflows, do they understand?
No, see, that's the thing. I don't think most people get it. I think a lot of people look at this and they, particularly, I noticed in the gold space, The gold stocks, as you know, and as I've talked about other podcasts, really haven't responded the way they should have. Gold's up 30%, the stocks are up 30%. Typically, the stocks are 2 to 3x the gain of the underlying metal. And in this case, that has not happened. And the reason for that is if you go on Bloomberg and you check the future forecast, nobody thinks the gold move is real. Everybody thinks, oh yeah, it's at 26, but it's coming back to 2,000. And the ASICs, which is the all-in sustaining cost of mining an ounce, are going to continue to march up with inflation. $2,000, pretty soon your margins are gone, right? And so what's got to happen is there's got to be a shift in psychology where people say, oh, this is the real deal. And gold's not stopping at 25 or 26. Gold's going to 3, and then it's going to 4, and then it's going to 5. And I think those things are happening, obviously, over a course of several years. But until they get this fiscal thing solved, and it's not an easy fix, to me, it's very, very clear that we've got inflation in our future.
So then what is he inheriting here? And more importantly, when is it going to hit us? Are we just delaying the inevitable?
Yeah, so he inherits a really bad hand. Everybody's really excited about his election, and look, I support his policies versus the alternative. But I'm not sure God himself could solve this thing simply. It's a mess. It's a real mess, and this is a fiscal mess without the stock market or the economy being in trouble. I mean, the last 2 times the stock market went down substantially in the 08 bust and in the 2000 bust. You had enormous deficits following it. You had an enormous unemployment following it, and so if our stock market gets broken at some point, then I think I'll move into kind of the next point, which is I think we know how the Federal Reserve is going to have to respond, and I call it the big print. Mm-hmm. I mean, they're just going to have to, go back to QE, go back to ZIRP, maybe do yield curve control. I mean, and we're already starting to see that. I mean, I find it extremely interesting that the bond market, here they are, they've cut interest rates, and yet the longer bond, has gone up since that interest rate cut. And I'm kind of like, wow, how did that happen? Doesn't make sense.
In your presentation, you said that it's only a matter of time. This big print is coming, as you just mentioned. The Fed's balance sheet will go over $20 trillion. Elaborate on this. How soon? What does that look like?
Some people say that's hyperbolic, but it's not if you really look at the trend. I mean, if you look at what they created in the dot-com burst, if you look at what they created in the GFC, if you look at what they created with COVID, each one gets progressively larger, right? It took Bernanke 4 or 5 years to print a couple, trillion, 2-3 trillion. It took Powell six to 18 months to print 5 or 6 trillion. So it was really kind of nuts. And I think that in order to save the next one, they're going to have to spend, it's going to be kind of unlimited. I mean, he will have to do what I call a Mario Draghi, which is he'll have to say, whatever it takes. Yeah. and my sense is it's going to take a great deal if the stock market comes off hard. And so to me, that the 2 things that I'm watching that I think are the big triggers, I'm watching the bond market and I'm watching the stock market. And so
timeline though this year, like what you worried?
I don't know. Nobody knows, right? But it feels like we're getting close. I mean, we know that the bond market, when the 10-year gets over 5, we know they have a problem. That happened in September of 2023, and they immediately came out. 12 Fed governors came out and started jawboning it down. So it kind of 5% on the 10-year seems to be like a trigger point. Mm-hmm. The stock market, I don't know. It just keeps on rolling, and it could roll higher. There's a guy I respect, David Hunter, who's on Twitter and is ex-Fidelity manager, very seasoned, and he thinks we melt up to 7,500 on the S&P. And for all I know, we could. I mean, there's a lot of excitement around this new administration. But if you look at Hussman's numbers or any of the valuation metrics, like the Buffett indicator and PEs and price to book, well, book doesn't matter anymore, but you look at all the valuation, we're redlined, like we're right at the top. I mean, markets don't get more expensive than the stock market is right now. They just don't. And so when does that end? I don't know. I mean, maybe it could get more expensive still. I'm not shorting it, but I surely tell my clients, I don't think that's an area where you want to be heavily long.
Yeah, let's talk about the Fed for a moment. Obviously, we have that upcoming FOMC meeting. We saw those aggressive 50 basis points, another 25, 75 write-off since September. Yeah. For the first time ever, the U.S. is spending more on debt than defense.
Right.
What does this look like for the Fed?
Well, the Fed's in a real box, okay, to me, it's unclear how they're going to solve it, but I think all roads lead to inflation. I think Paul Tudor Jones said that, and I believe he's correct. And we know that they want to try and portray themselves as inflation fighters, and they have. Powell's tried to, he's tried to channel, Volcker, but can he continue that? He's tried. Yeah, well, he did. For quite a while, he raised really quickly, but Can he continue that game? I just don't know. I mean, but here's what I do know. I do know that if and when something breaks, the third Fed mandate is continued financial stability, right? And we've seen it constantly. We saw it with Silicon Valley. We saw it with the repo blowout in 2019. We saw it with, just the higher yields on the 10-year in the fall of 2023. When things get dicey, what do? They go to the only tool they got. I mean, to them, they got a hammer and everything looks like a nail. and that's the printer. So, but what I can't tell you is I don't know when things are going to get dicey. I just don't know. But I have an extremely, in my, and this is just my personal opinion, I've been wrong a lot, okay? But I have a very high conviction level that the math is compelling that they will get dicey at some point. And I kind of put the outer limit on the diciness at 2 years. There's no way they can keep this going for the next couple of years. But I've been wrong about that before too. I mean, in 2008, I thought we were going to have a much longer crisis, and they did a lot of sneaky things that managed to hide the inflation, put it into the assets, not in CPI. I mean, in 2008, I thought we were going to have huge CPI inflation. We didn't, and we didn't because they changed the payment the rules and allowed them to pay interest on excess reserves, and so all the money got stopped up at the banks, and then it went into the assets. So. Yeah, it's
a bunch of politics too.
Yeah, there'll be a bunch of politics too. I mean, it's very interesting as we watch who they're trying to pick a Treasury Secretary, right? We watch who they're going to pick. Clearly, the most intelligent and thoughtful guy would be Bessent. But, I think Elon wants to break a lot of glass. And he wants to get in there and just start, cutting away at everything. And okay, I mean, that's fine. And there's an argument that a lot needs to be cut. But guess what? If you do that, the stock market's going to, you don't do that without having a serious economic downturn, right?
There's got to be consequences.
Yeah, so back again to my initial point, which is they're trapped. I just don't see how they get out of this. And what the path is so hard to know. Nobody knows. But it does, because we don't think they'll let the economy collapse. They're not going to get to the stage where we say, well, forget about it. We're just saying, we're not going to let the ATMs work, right? When push comes to shove and financial distress is present, they will say this is a crisis and therefore we have to print the money, and that'll be the excuse.
Have you been surprised by the resilience of the U.S. dollar here? What does that look like?
I've been completely shocked.
What's your outlook? Where are we going?
It's funny. I'm not the best guy to talk to about the dollar. I really respect the shit out of Brent Johnson and Santiago, and his theory is damn right. And a lot of people say, hey, the U.S. dollar will never hyperinflate, all these others will go for it. They could be right. I'm not an FX guy. I'm kind of a stock guy, and I look at, and I'm a sound money guy. Right. And so to me, what the dollar is compared to the euro or the yen or all the, I don't know, I don't care. What I care about is what's the dollar compared to alternatives to the dollar, and the alternatives to the dollar that are to me the most obvious are gold and Bitcoin. And so, those are, and to an extent, the yield on bond. So those to me are kind of how I measure how the dollar is doing.
Let's talk a little bit about your outlook on gold. It's been a heck of a ride since we saw that post-election dip, but it's been coming back very resilient, almost breaching 2,700 today. What's the outlook?
There's no bigger gold bull than me. I think we're going to 3,000 within the next 6 months. I think we're going to breach that. We need to. Gold is so deeply undervalued, it's insane. It needs to be in a different zip code. So I see 4,000, 5,000. At the end of the cycle, it could be 20, 40, 50. Which sounds absurd, but it's not. It's really not. If you take it and if you did the math the way we did it in 71 when we were on a gold standard, Brent's done this actually, you'd need to be at $79,000 per ounce gold to balance the out, and that's assuming we have the 261 million ounces.
Into that a bit. Break that into it a bit.
So just take the broad monetary aggregates from the 60s. Right. Divide U.S. theoretically has 261.5 million ounces of gold. Okay. And I say theoretically because Ron Paul personally said to me, "I'm sure we don't have it." Yeah. Okay, so, but all right, fine. Let's assume we do. Okay, for the sake of argument. And it's in the Treasury. The Treasury owns it, and they could mark it up. They could turn around, and this is what Luke is proposing, and it's a smart idea. They could mark it up to some saying, we're going to go back to a gold standard and buy and sell at that price. But anyway, back to the numbers, the math. Back in the 60s, early 60s, before we started the Vietnam deficits, you could take the monetary aggregate, divide by those number of ounces, and you came up with a $35 reference price, which is what they had, they set it at Bretton Woods. Okay. Same math, broad monetary aggregate, 261 million ounces, $80,000 an ounce for full coverage. I mean, it's nuts, right? I mean, it's just now you don't need to have full coverage to be on a gold standard.
Yeah.
There are many successful gold standards that have worked at 20% coverage or 30 or 40% coverage. But the point is, even 25% coverage would imply a $20,000 an ounce gold price, which is a long way from 2,700. So gold, if gold is going to be used as money again, it is deeply undervalued. Deeply.
What are your thoughts on Cynthia Lummis, the senator trying to do a Bitcoin reserve?
I think it's great. I mean, honestly, I'm as you know, I'm a big Bitcoin bull, and some gold people hate me for that. But I think they're both forms of sound money. It's analog sound money and digital sound money. We're moving into a digital world. I do think Bitcoin will ultimately prevail. It's going to take a lot of years, decades, but it's going to happen, in my view. It's a smart thing, in my opinion, for the U.S. to lean toward the Bitcoin side. And the reason is that China and India and the Middle East and Russia have all been large accumulators of gold. And so it would be kind of a 3D chess move for us to say, oh yeah, that's great. I'm glad you guys all have that metal, but we're going to support an underlying sound money standard based on Bitcoin. And by the way, we happen to be leaders in that area, right?
It sounds like, the senator doesn't she wants to sell the gold to buy the Bitcoin.
Well, yeah, I'm not a big fan of that. Yeah. I didn't like that suggestion. And honestly, I don't know that she's going to be able to succeed in what she's trying to do. I don't know if they have the votes, but I hope she's able to succeed. I'm rooting for her. Yeah. And other important things, U.S. has 200,000 Bitcoin right now that they seized from Silk Road. And I hope the Biden administration doesn't sell those before. And it's interesting to me, I was actually speaking about this with Jimmy Iurio last night. It's unclear who has the authority to set up the strategic reserve. FDR just did the gold thing by executive order. Right now, she's introduced this as a bill. Is this a congressional matter, or is it an executive matter, or a Treasury matter? Would it be contested in the Supreme Court? It's not kind of clear how the monetary system is controlled. It's one of those amorphous things. You got this Federal Reserve that's kind of private, but it's backed by the government. You got a lot of the monetary world politically. It's messy.
Yeah, it certainly is. Trump's called himself the Bitcoin president while running.
Well, that's because he wanted the votes.
He wanted the votes, but we are seeing some pro-Bitcoin strategy. SEC Chair Gary Gensler obviously gave he said he was leaving January 20th. That came out yesterday. Bitcoin shot up to 99,000, all new, all-time highs. Are we going to hit 100? Where are we going? What's your outlook?
Yeah, so once again, I don't know anything. None of us know the future, right? If you look at history and if you look at the cycles and you look at what tends to happen when it runs, and it does one of these runs, it tends to go 4x the base. The base was kind of 50 or 60. So I easily see it in the cycle hitting a peak of 200,000. Then everyone will be out over their skis and a lot of people will be levered up. And then we'll have a cleansing downturn, which will probably bring it back down to 100 or so. I'm still comfortable buying it here and have bought some here. But as it goes higher, I'm pretty loaded up on it. I probably won't chase it into the 200-300 range. I know there are people who think it'll go to 300, 400, 500, and that's possible.
But when does it stop, and how dangerous is it?
Well, that's the thing. I like to use a model called the power law model, which is a log of time and a log of price, and it kind of has a baseline. And what it shows is that it tends to go 1 to 2 standard deviations above it on these bull market runs, and then about 1 standard deviation below it when it corrects. And that's, you got 5 of these cycles now since inception. So if you get on Twitter and you go to Fred Krueger's site, you can see a lot of that, and it's very well mapped out. And so you can kind of get a sense of what's likely to happen to the price.
Yeah. I'm curious, we just got this new information out from the ECB. They had their financial stability review, and they really are highlighting some growing risks about a new debt crisis in that region. We hear it from China everywhere right now, to the point where, what does this look like? If we're in this whole everything bubble, what's your top assets for this year?
Well, my top assets are just all around, are just gold, silver, and Bitcoin. Right now, probably of those 3, silver's the cheapest. It's kind of stunning to me that silver hasn't done more than it's done, particularly given all the new applications that are coming out. We need solar, and this solid state battery stuff will start to kick in eventually. And so, and it's underperformed massively. Now that's partly because the stock to flow is higher than gold, but I like them all. I like all 3 of them. I don't like stocks that much. Commodity stocks and foreign stocks. Proctor just had a nice chart showing how cheap international stocks were compared to the U.S. stocks. And I just hate bonds. I just don't see. I know there's some people who think, well, you'll have a deflationary collapse. You'll be really glad you own a 30-year because you'll be locked into a return when there are no returns anywhere. I just don't see them letting a deflationary collapse happen. Now, it's possible though, that it could overwhelm even the printer, and you could get outright deflation. I don't know. it's a messy situation is the only way to describe it.
It is a messy situation. Larry, you and I were talking about bridging the gap between the gold bugs and the Bitcoin fiends. I mean, there's a lot of hate out there, but the fact is you can own both assets. Has a new population...
It's fun. I'm here, and there are a lot of gold bugs here. I'm talking to a lot of guys who are older than me. I'm 67. That I'm orange pilling them, right? And they're getting it. I mean, look, my view is we're all on team sound money. I'm writing a book about this. It'll be out in a couple months. My belief is that the country has been ruined by inflation and the Federal Reserve and unsound money. And my further belief is that we need to return to sound money. And so the people in the gold camp and the people in the Bitcoin camp, we're all working for the same thing, which is to get rid of the Fed and to go to a neutral reserve currency that's sound, so that our kids and grandkids don't suffer with the cycles that we've all suffered with.
What about the thoughts? I mean, we just had Judy Shelton on the show.
Oh, she's great.
She's great. She talked about gold back. I mean,
gold back bonds.
What's it going to take?
Yeah, well, that's a great idea, and it's a great approach. I read her book, and I know Judy pretty well. To be honest with you, though, I don't think that alone solves it. I think we need to, the governments actually need to decide to do a reset, a Groman-like reset, where we say, okay, we've sinned, and we're going to devalue this debt in real terms, which means it's going to be very bad for debt holders, and it's going to be somewhat one-time inflationary, and that's going to be painful for humans and all citizens, sadly. But once we do it, we're on sound money. And once we're on sound money, things get a lot better. And I've studied a lot of inflations, hyper and just high inflations, and the history shows that when you return to sound money, life gets better. Now, getting from here to there, that's going to be rocky, right? I mean, let's not kid ourselves. I mean, this is, in fact, in my book, I talk about this a little bit. I call it the evolution of an alcoholic. I mean, you're drinking, and you're drinking too much, and that's the equivalent of debt. And then, eventually you decide to go cold turkey. Well, it's going to hurt.
All things must come down, right?
Yeah,
okay, before I let you go, because I know you're a busy man here at the conference, it's a 50th anniversary, obviously. Investor sentiment changed a little bit to you this year?
Yeah, I mean, people are happier because finally our stuff's starting to work. I mean, I've been here a couple of years. It's been pretty rough. I would say it's, I think, and in fact, in my speech earlier this week, I tried to make the point that, we're winning finally. And I'm very hopeful for the future because I think that, I don't think this bad game that's being played can go on that much longer. And really for me, set aside, getting rich and investing and all that kind of crap. To me, the most important thing that we got to solve in the world is we got to stop killing people. I'm horrified by all the wars that have happened, starting with the Vietnam one when I was, a teenager. And just since then, all the thousands and millions of people that have been killed by war. And the fact of the matter is those are wars that are funded by inflation. And
money printing, the press.
Exactly. And if we had, as von Mises and others have said, if we had a system where the government couldn't, do that, that depredation wasn't available to them, I think, it'd be a much healthier, safer, and better world where, innocent people weren't being killed. And because it just horrifies me.
You think we're going to get into a safer world now that Trump's in?
Well, yeah. Yes. In some respects, I think he's less warmongering than the neocons. I think he'll probably solve the Ukraine situation. They'll partition it. I do actually, honestly. Look, the military-industrial complex and the deep state, it's a big monster. And I'm not really sure he can slay it. But he can get started. And, probably as generations go by, and as we return to sound money, we will slay it. I do believe we will slay it because I think I describe in the book, what's happened here is we've hit diseconomies of scale. We centralized, we got really big scale because it was efficient, the best way to make things. And what we've discovered is it's out of control. And all those institutions and everything, it all got corrupted, right? And so the best things, the things I'm so excited about are decentralization. The internet is changing the world. You guys, Joe Rogan, New York Times, who cares?
Yeah,
goodbye. CNN, goodbye.
Yeah.
Now they're listening to you, they're listening to Adam Taggart, they're listening to the, smart guys on the web, right? And getting the true story. And then, and on the money side, they've got, a form of money that the government can't screw them with, that they can't dilute because they're constantly diluting the beer. So, yeah, it's all, I'm very optimistic about the future, but the book is I'm very cautioned, I caution people about, you want to be on the right side of this because you're not going to get a do-over, right? I mean, if we really go through a monetary reset, it's a one-time deal, and if you've got bonds and you don't have, sound money, I think your condition's not going to be very good.
Well said. Yeah, well said, my friend. Okay, well, we're in the in-between, so obviously post Trump getting in and the inauguration, we'll have to get you in a couple of months, see what that all looks like.
Yeah, we'll see what it looks like. It's going to be interesting. I've got the popcorn out.
I know, me too.
And my partner and I were talking constantly. I mean, just this Treasury Secretary thing. Yeah. I mean, is it Lutnick? Is it Bissett? Who? It's wild.
I don't know. I mean, he seems to have some interesting picks, but so far, I mean, great people in place.
Oh, well, I was very, very pleased when I saw him embrace Kennedy and Tulsi. I mean, okay, this isn't Trump 1.0, this is Trump 2.0. He's taking advice, and Elon, and I'm not, Elon's not perfect, but he brings something to the party. And so, I think the fact that he's got other advisors helping him now, I like it. I like what I see.
Smart, not just politicians, but businessmen too.
Yeah.
Larry Lepard, of course, is the founder of Equity Management Associates. Thanks, my friend. Appreciate it.
Thank you. Really nice to talk to you. Yeah, enjoyed it. Yeah.
I'm Jeremy Szafron with Kitco News. As I said, we are on location at the New Orleans Investment Conference. We're going to have great guests all week, including Adam Taggart. So stay tuned. We'll see you next time.
Kitco News, special coverage of the New Orleans Investment Conference, is brought to you by Uranium Energy Corps and U.S. Gold Mining.